Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Indoco Remedies, hosted by Centrum Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Cintula Carvalho from Centrum Broking Limited. Thank you, and over to you, ma'am.
Thanks, Margaret. Good afternoon, everyone. I, Cinderella Carvalho, welcome you all on behalf of Centrum Broking on the Q3 earnings Concall of Indoco Remedies Limited. At the outset, I thank the management of Indoco Remedies for giving us this opportunity to host the earnings call. From the management team, today we have with us Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, Mr. Pramod Khorpade, CFO, Mr. Vilas Nagre, Corporate Affairs and M&A. I now hand over the call to the management team for their opening remark. Over to you, management team.
Thank you. Good afternoon, all the participants. Hope you and your family members are all safe and healthy. Let me first begin with the business highlights. Net revenues of the company grew by 4.6% at rupees 348.6 crore compared to rupees 333.3 crore for the same quarter last year. For the 9-month period ended December 21, revenues grew by 19.5% at rupees 1,102.4 crore as against rupees 922.6 crore. EBITDA to net sales for the quarter is 21.1% at rupees 73.4 crores compared to 18% at rupees 60 crores. EBITDA for the 9-month period is 22.4% at rupees 246.5 crore compared to 18.3% at rupees 169 crore for the same period last year. PAT to net sales for the quarter is 9.5% at rupees 33 crore compared to 7.5% at rupees 25.1 crore, and for the 9-month period it is.
Ladies and gentlemen, we lost the line of Mr. Bambolkar. I would request you to please hold while we reconnect him. Ladies and gentlemen, we would request you to continue to hold the line while we join the management again to the conference. Request you to please hold the line. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have Mr. Sandeep Bambolkar connected in the call with us. Over to you, sir. I would request you to please repeat yourself.
Yeah. We were at domestic formulation business. Revenues from domestic formulation business for the quarter grew by 15.2% at rupees 181.5 crore compared to rupees 157.6 crore for the same quarter last year. Major therapeutic segments, namely anti-infectives, gastrointestinal, urological and respiratory performed well during this quarter as compared to the previous corresponding quarter for the last financial year. For the 9-month period, revenues grew by 27.2% at rupees 610 crore as against rupees 479.7 crore for the same period last year. During the quarter, Dropizine syrup 100 ml, the molecule name is levodropropizine, and chlorpheniramine maleate syrup was launched under the respiratory segment. Now on the international formulation business front, revenues from international formulation business witnessed a growth of 5.5% QOQ. For the 9-month period ended December 21, revenues grew by 19.5% at rupees 431 crore as against rupees 360.5 crore for the same period last year. YOY revenues were flat. Revenues from regulated markets for the 9-month period December 21 grew by 18.2% at rupees 348.4 crore as against rupees 294.7 crore for the same period last year. QOQ revenues degrew by 2.3%. Revenues from US business for the quarter grew by 9.6% at rupees 49.1 crore as against rupees 44.8 crore for the same quarter last year. For the 9-month period, revenues grew by 24.3% at rupees 143.1 crore as against rupees 115.1 crore for the same period last year. Revenues from Europe registered a growth of 13.7% for the 9-month period for the current fiscal year at rupees 193.1 crore over the same period last year at rupees 169.9 crore. Quarter-on-quarter sales have degrown by 9.1% at rupees 54.3 crore over previous quarter of the current year, which stood at rupees 59.7 crore. Revenues from South Africa, Australia, New Zealand have recorded 25% growth for a 9-month period of the current fiscal year at rupees 12.1 crore over the same period last year at rupees 9.7 crore. QOQ sales grew by 41.5% at rupees 5.4 crore in the previous quarter of the current year, which stood at 3.8 crore. Revenues from emerging markets for the quarter grew by 27.9% at rupees 34.3 crore as against rupees 26.8 crore for the same quarter last year. For the 9-month period, revenues grew by 25.5% at rupees 82.6 crore as against rupees 65.8 crore. Revenues from API business, the growth for the revenues from API business remained flat at rupees 19.69 crore over 19.73 crore. During the 9-month period for the current fiscal year, the API business recorded sales of rupees 50.3 crore. Revenues from Anacypher CRO and Indoco Analytical Solutions for the quarter grew by 43.4% at rupees 4.4 crore as against rupees 3 crore. The 9-month period revenues grew by 32.7% at rupees 10.9 crore as against rupees 8.2 crore. That is all about the business highlights for the third quarter, and I now request the participants to put up their questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khemka from InCred AMC. Please go ahead.
Yeah, hi. Thank you for the opportunity. First question, sir, on the India business. So while 50% growth YOY looks good, but if I compare your 3Q FY22 revenue to your 3Q FY20 revenue in India, they are both similar at around 180 crores. So which basically implies no growth whatsoever from FY20 third quarter to FY22 third quarter. So could you take us through what has been the reason for such a performance?
Aditya, you're talking of growth in quarter 3 FY22 over quarter 3 FY20.
That's right.
Is that right?
Yes.
Hello?
Yes.
Yeah. Okay. We were fine. See, as such, if you look at the health of the pharma business in the India space for us, frankly, we have been doing exceedingly well in all our 4 core therapy areas: respiratory, stomatologicals, anti-infectives, and GI. If at all there is, and Q3 FY20, there might have been a one-off event, I think, because otherwise third quarter for us is not a big quarter. In 20, I'll just look at it and maybe I'll answer your question a little later, more meaningfully. But let me just talk about third quarter this year in any case for performance. As you know, in Q1 this year, we had the upside of the COVID wave. In Q2, we got the season to support us. And in Q3, again, we may not have measured in absolute terms equivalent to the Q2, but the business has done really well. And both COVID as well as non-COVID baskets have done well this year for us. So if you look at the corporate, we are ranked now 26 as per in the IPM as per AVAX, and 23rd as per SMSRC in prescription ranking. And all over growth and all parameters indicating health of business remains strong. I'll come back to you on what had happened in 2020 and answer your question again. Okay?
Yeah, ma'am. So basically, when I look at your FY20 quarters, it doesn't seem like a one-off because we did like 160 crores in 1Q in 20, then we did 180 in 2Q, and then we did 178 in 3Q, which tends to be the normal sort of trajectory of the business. 1Q, 2Q better than 1Q, and 3Q slightly less than 2Q. So this doesn't have to be a one-off. My major concern here is that, if I look at your 1Q 22 versus 1Q 20, then 2Q versus 2Q 20, and then 3Q 22 versus 3Q 20, while 1Q and 2Q we have shown 45-22% growth over 20 respective quarters because 21 quarters were obviously disrupted. We see material growth in 1Q 22 and 2Q 22, and I understand some of it could have come from COVID, but 3Q is like absolutely flat, so COVID or no COVID, our base business has just not grown from 3Q 22, 3Q 22.
Okay, let me come back to you because I would have to understand what was in the base of the 2020 performance.
Sure, ma'am. And second question along the same business. So, in our previous call, we said that we were optimistic about crossing about 850 crores in the India business in FY22. Now that in the 9 months we have done only about 610 crores, full year number will definitely fall short of 850. So where do you see the full year number now, and what changed for us to not meet that number? Some color on that.
Yeah. So Aditya, 850. If you remember in my previous calls, the explanation was very clear. We had taken growth on a previous year of degrowth. We had also looked at various parameters such as West, which was more heavily impacted and where we are strong and therefore our ability to rebound. Having said that, for a 9-month period, we are at 95% of the target taken. So as such, the fourth quarter target is on the higher side, and I feel pretty confident of being able to do well for the year. Okay, we may not do 850 is the field target, but we will come close to it. Not to worry.
Okay, but even if you were to come close to it, ma'am, your 4Q sales will have to be better than 3Q sales. Is that a possibility, given that 4Q is actually seasonally the worst quarter?
Aditya.
Sorry, ma'am, I couldn't catch that.
Yeah, it's a definite possibility.
That 4Q can be better than 3Q in terms of absolute sales.
Yes, yes. As you know, for the half year this year, the company was on target, and 60% of our field sales officers were in excess of 100% of their target. What has happened in Q3 probably is a kind of a learning effect, people getting into comfort zones, but it has not impacted our secondaries in any way. And I'm very confident Q4 will come back.
Okay. Okay, thanks for that. Now, coming to the export side of business, question for you, Sandeep sir, on the European business. So our EU sales, again, seem to be tracking short of what we had indicated in the previous calls. Any particular reason you would like to call out why European region sales have been lower than what we were expecting?
Yeah, I had indicated in the last call that Q3 we were not on track as far as Europe is concerned. The main reason was that the API price of paracetamol had shot up, and as a result, we were not getting the desired feedback from our front-end partners.
Mm-hmm.
So that was one of the reasons we had to slow down on that molecule, and that is the main reason. However, the brighter side of the story is things have come back now, at least 70 to 75% on track compared to what it was in the last quarter. So in Q4, we should be doing far, far better than Q3 as far as Europe is concerned.
Understood. So for the full year, when earlier we had said about 300 crores for Europe, now do you feel like 270, 280 is doable, or do you feel?
Yeah, 285 to 290 is certainly doable.
Okay. Okay. And same question for the US business. Since we launched brinzolamide, we haven't really seen a material uptick in numbers. So 3Q FY21, we were 45 crores in US. I understand there were some milestones included. And in these 3 quarters since we have launched brinzolamide, we are doing 45 to 48 crores in the US. So is the product not really getting market share? Are we not really making money on brinzolamide, or is it that the base business is sliding too fast?
No, we are making money, of course. And we have to give it a little time to settle down. If you see in this quarter, US has done 49 crore. It is the highest among all the past 3 quarters. So in Q4, definitely things will look up. The order book is extremely healthy as far as US is concerned. And directly on our own, having out-licensed the ANDAs or through partners, we now have about more than 18 products in the US. So definitely things are on track for Q4.
All right. One last question, I think for the CFO. This is on the other expenses line item. So our other expenses were, about 98 crores, both in 1Q, 2Q. This quarter, the other expenses seems to have come off significantly. It's only 88 crores, so 10 crores lesser than the last 2 quarters. And I can see R&D expense hasn't really changed that much. It's about 17 crores. So what has driven the change in other expenses? What is driving the lower other expenses? Or, is this cost saving, or is it just seasonality of expenditure is what I'm more concerned about?
Yes, Aditya, Pramod here. So if you see overall, you're right. One is about, cost saving measures or cost control, cost efficiency measures. That is one. Secondly, we have operational excellence program. We are working very well in all plants, And third is about less, sales and marketing expenses in line with the sales. So these are the, primary reason for reduction in overall other cost.
Got it. So basically, because the sales did not come up to the level that it was in the past 2 quarters, that is why other expenses. So it's mostly variable expenses, which are lesser than the previous 2 quarters.
Exactly.
Understood. Just one last question, and then I'll get back in the queue. What's our current net cash or net debt position?
I'll take that. Short term is around 120 crores and long term is also equivalent.
So 120 crores of debt, and this is net or is this gross of cash?
So this is, yes, sir, gross of cash.
Gross of cash, yeah.
Yeah. So how much cash do we have right now on the books?
So roughly, it is in the range of 6 to 8 crores.
6 to 8 crores. So about 240 crores of net debt. Got it. Okay. Thank you. I'll get back in the queue, sir.
226 is the gross. So you have to net the cash. So net balance is about 119 to 120.
220. 220 you meant.
220. Yeah, you're right.
220. Okay. Okay. Thank you. Thanks a lot.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hello. Am I audible?
Yes, sir, you are.
So, my question relates to our CRO business. So, when we are likely to see the scale in this business, and is this business profitable at the EBITDA level right now?
Yes, sir, it is definitely profitable at EBITDA level. Indoco got into the CRO business through an acquisition some years ago. We acquired Nicholas Piramal's site at Hyderabad. And it is comparatively a much smaller scale CRO. It met with our needs. Indoco had filed several first to file Para 4 products that year and we continue to use about 50 to 60% capacity for our own needs. And the rest is being, we have external clients and customers servicing. Looking at the performance of the division, we have planned to expand it and will be doubling the capacity in the coming year.
So how many scientists we are employing there?
This is a CRO, so we have around 80 employees, of whom about 4 to 5 are medical practitioners, and the rest are bioanalytical scientists and clinical technicians, statisticians, etc.
And lastly, ma'am, our material cost as a percentage of sales has shoot up very sharply, both year over year and quarter over quarter also. So what is the main reason and why we are not able to pass it on?
Why we are not able to pass it on largely is, at least for the India side of the business, we are into brands and you're not able to increase prices just like that. Let me come to why we have got impacted. As you might have been aware, the whole China situation it was anticipated that the cost of goods would get impacted. However, at Indoco in the first 2 quarters, because of better planning, availability of product, and materials in hand, we were able to, for the first 2 quarters, not have this kind of impact. But in this quarter in particular, it has hit us. So cost of goods has largely gone up because of the increases in prices both of starting materials for API as well as some of the APIs we purchase, particularly from China.
Okay, ma'am. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Kunal Mehta from Valent India. Please go ahead.
So thank you very much for the opportunity. I wanted to understand, could you please let me know the market share of Teva in brinzolamide as at the end of this December quarter?
Teva's market share is close to 22%.
Okay, ma'am. And for this quarter, ma'am, wanted to understand, have you accounted for any significant profit share on the product, or it will depend on remittance from the customer, from the partner, and then you would later account it in the coming quarters?
Yeah, we have not yet accounted for any profit share.
Got it, sir. And sir, any indication as to, I mean, I'm not asking about in which quarter, but in terms of what the duration? I mean, would you recognize it every 6 months, or would you recognize it on a yearly basis, or how would it work?
Actually, it all depends as and when the profit share accrues to us. That's the time we account for it. So mostly now it will be directly in end of March.
Got it, sir. Sir, I wanted to understand regarding the order book in Europe. Can you please let us know, I mean, the situation of the order book for Europe for the next next 6 months? I mean, for how long?
The order book in Europe is at around 120 crores right now. So the order book position is very sound. It's a question of executing those orders, in a very efficient and successful way, which we are planning. And as Pramod spoke about the operational excellence program, which we instituted during the year between finance and operations and the plants, that is taking very active shape. And that's the reason we have the confidence that Europe will deliver definitely close to the figure which we had committed.
Understood, sir. And sir, this 120 crores, I mean, order book to billing will happen over the next, will have to continue over the next few quarters, I mean,
No, over a few months.
Okay, got it, sir. And so just final thing, I wanted to understand regarding the initiative of, passing on the inflation in raw material prices on the domestic side. So I wanted to understand, I mean, do we have, regarding a price increase for the, especially for the brands under the NLEM, do we have any visibility as to when we would be allowed to take, and what quantum would it be regarding the price increases? Especially on the acute side.
Yeah, generally what happens is the non-scheduled products, we are allowed to take a price increase up to 9 to 10% per annum. And the scheduled drugs, of course, goes with the government directive. But it's a matter of, the number of brands competing in the market and so many other factors, whether a company wants to take a price rise or not.
Understood. But sir, in the coming few months, based on the fact that everybody in the industry is facing strong pressure, I mean, if you have to put a number on, what is the expected price rise across the board, which can happen at an average level, I mean, would it be a high single digit?
So we are currently at around 4.8 or 4.9% price rise that has been taken on the entire India. Okay. And certainly in the coming quarters, based on wherever there is scope to increase, we shall look at it.
Got it, ma'am. Thank you very much for the answers.
Yeah. Aditya, can I come back and answer one of the earlier questions, or we'll wait for you to come back in queue?
That's Aditya Khemka. He's back in the queue, so I will take the next question.
Okay, I'll take it when he comes back. No worries.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Aditya Khemka from InCred AMC. Please go ahead.
Yeah, thanks for the opportunity. Yes, ma'am, you wanted to answer the question about 3Q20.
Okay, so Aditya, I just dug out my numbers for 20 to be sure. So first and foremost, if you look at our product-wise performance or therapy-wise performance, we are at par except for respiratory as a segment, where this year, because of performance of Karvol Plus, we have done well. But one product, Febrex Plus, is not yet back to the pre-pandemic levels. And that is a major brand for the company. So that is one product we've seen the stress. And if I look at the particular performance of Q3 that year, Q3 FY20, Febrex Plus had grown by 30%. So I would have to look at some other, probably there was a scheme operating in the market or something like that, to unnaturally push numbers for that category. If you look at our performance, otherwise, Aditya, Febrex Plus also compared to the last 2 years is quarter on quarter doing well, month on month doing well, but it is yet not back to the earlier levels of 20. So that is the reason. I just wanted to clarify.
Sure. But ma'am, what sort of seems to be a bit of a problem here is that a product like Febrex, which has paracetamol, chlorpheniramine, etc. In COVID times, and we have seen a slight bit of a wave this quarter as well, in the December quarter as well. What worries me is that, in those times, if products like Febrex don't do well, then, what sort of, are we losing market share in the representative segment, or is it that the segment itself is not doing well?
As such, Aditya, although these products sound like it should do well in COVID, it is, I think in Q4 you will see that. Like I mentioned, there has been one challenge we have faced at the corporate level in Q3. Our two top acute therapy divisions, both are on very high achievement of target, in excess of that target. And when that happens, as I said, it is a little difficult to push people to do their primaries. The division which carries product Febrex Plus also carries ATM, our azithromycin brand, which has actually got a better, kind of a tailwind this year because of the COVID situation. So we all agree internally also that it is performance of ATM which probably has not got our people to go all out for Febrex Plus, and this is recognized and corrective measures are being taken in the last quarter.
The only reason that is because if you see Dolo, the performance of Dolo in our market.
Dolo is plain paracetamol, Aditya.
Yeah, I know. I'm just saying that, the paracetamol related brands with the Dolo, Crocin, they've all done exceptionally well. So that sort of worries me whether, Febrex is, it has to be something internal rather than external.
Yeah, I get it. As I explained, this kind of a dual thing has happened with Febrex Plus, but definite strategies are in place now to correct this.
Right. And ma'am, what part of our portfolio is under NLEM?
11%.
11%. And so for this 11%, given that WPI is still north of 10%, I think last I checked it was 10.4. So one should safely assume that you will be able to take a 10% price increase in the entire NLEM portfolio. Am I right?
Yes.
But for the non-NLEM portfolios, where you guys are saying you are slightly more tentative because their competitive positioning will make a difference.
Correct.
But in the non-NLEM portfolio, in how many categories would we be, let's say, the top 3 leaders in the respective molecule or, in the respective therapy area?
We are in top 3. If you look at our, it depends on how you categorize, Aditya. So we've never considered it like that way. Cyclopam is number 1 if you look at the, dicyclomine paracetamol market. If you look at it in the antispasmodic market, we are number 3. So the same appears for most others. For Febrex Plus, we are number 2 and 3 depending on where we are in the country. For ATM, which is azithromycin, we are number 3 now this year in the azithromycin brands. Carvaclus, for the dental products, we are number 1. So in many categories, we are number 1. I understand where you're heading with this, whether you feel we will be able to take price rise or not because of our competitive position. So these are decisions we make strategically based on where we feel, we have strengths or otherwise.
Yeah, so wherever you are top 3, right, maybe 1, 2 or 3, would you say that's a strong enough position to take a price increase, or would you still have to watch out for the leader to take a price increase?
Absolutely, because these are not very expensive products per se. So that 8-10% is not going to damage the pockets of the buyers also. Yeah.
Exactly. Yeah. So, ma'am, sorry to dwell on this a little more, but so what percentage of your non-NLEM portfolio, okay, you can say, with certainty, given the positioning of the brand or the absolute price of the product or the leadership of the brand, whichever variable, you pay more weightage to. What percentage of your non-NLEM portfolio would you say you will be comfortably be able to take a high single digit or a 10% sort of a price increase? Because your cost pressure is very, very visible, but your 50% yes.
Okay, I'll just come in on that cost pressure side also. Partly the cost pressures have come in not only for India business on brand, they've also come for the international business because of the starting prices of API. And like Mr. Sandeep explained in the earlier response, it is also one of the reasons we slowed down manufacturing, some of our contract manufacturing kind of product line, because we could see that there is definite pressure on margins. There is now a good understanding with us of ours with partners, with which we are expecting to be able to give a better margin. even for the contract manufacturing business. So you will see the cost of goods come under control soon.
Right. And in the fourth quarter so far, I mean, it's been only a month in the fourth quarter, but has the pricing of the solvent and key starting material come down relatively compared to the third quarter from China, or is it now stable but not coming down?
Stable but not coming down.
Stable but not coming down.
Yeah.
Stable but not coming down. So you need price increases to improve margins, right?
Yeah, let's see how the next 15 days of February pan out. Then we can take decisions.
But on Q4, we expect similar COGS.
Yes.
Yeah.
Compared to 3Q, right? Because of the pressure. Yeah. Sandeep, the same question for you. Obviously, outside India, we have a couple of branded businesses, as in some of our exposed to semi-regulated markets. So in those semi-reg markets, would you be comfortable with price increases to pass on the cost pressure? Regulated markets, I understand, because it's so competitive and there is no branding, it would be difficult. Please let me know if you concur.
Correct. See, part of the branded business in Africa, we are our own front end.
Right.
That's French West Africa, which is, this year going to do about 42 crores of business throughout the year. So that business, we have just stepped into that business. So we won't be keen to disrupt by taking price rises unless it is very much evident. In other countries, of course, we have already started asking for price rise, and we are getting a favorable response from the front end.
Right. I understand. And just one more question. On the API side, sir, now where are we on capacity utilization? I understand our internal consumption would be first priority, but our external sales have been around 20 crores now. So any visibility there of improvement in sales, or most of the capacity will be used for internal?
Yeah. Aditya, we are, our internal consumption has gone up significantly. And but we expect by next year to be able to sort this out so we can satisfy both internal and external customers. There is not much concern with the external customers' order position, but certainly this year, because we have not been able to satisfy them, there has been a little bit of an issue. But by next year, I expect external sales of API to also catch up. Right.
And Sandeep, sir, on the total EBITDA now, so we are at around 247 crores for our 9th month EBITDA in FY22. So safe to say you will easily be able to achieve your 300 crore EBITDA target for FY22.
Yes, true.
Okay. And just on this quarter's US sales, can you quantify how much was the milestone and what was that milestone amount in Tokyo, if you could remind me?
In Q3?
Yes. How much was it in Q3 and how much was it in Q2, if you could remind me?
Similar lines. I mean, for the company, I can tell you, not specifically on a product. Around 8 crore has come in through profit share this quarter.
8 crore has come through profit share in this quarter. And this profit share is different from what we used to call milestones, the regulatory milestones we receive from partners.
Yes, that is separate.
That is separate, yeah.
Yeah. So how much would be the regulatory milestones this quarter?
Regulatory milestones this quarter are close to 20 crores. Total, including the profit share.
Including the profit share. Got you. Okay. So this 8 crore profit share would largely be brinzolamide, am I right?
Yeah.
Okay. Understood. Okay. Thank you, ma'am. I'll get back in the queue.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Cinderella Carvalho from Centrum Broking. Please go ahead.
Thanks for the opportunity. Ma'am, if we can look at our Indian domestic market, given the wave 3 is also contributing in Q4, but on the new launches that we had done in the domestic market and the coming year, how should we look at it and what's the outlook here that you have and what are the new launches trend that you can help us understand? How are they progressing?
Yeah. So thank you for the question, Cinderella. As you know, one of the areas of weakness for Indoco as a corporate in the domestic space has been our ability to scale new products and make them a success. Earlier this year, we restructured part of our strategy group for the India business, created a chief marketing officer function, and the main sort of focus for this team has been to select and launch good products. So I'm happy to share that the products we have launched up to now, 2 products. One is Noxa, or the Noxacin cream, which despite being the 5th launch in its segment, in the very second month of launch has taken up leadership position and is the #1 brand in its therapy now. The second product which we have launched in Q3 is, as we discussed, Dropizin syrup. It's a peripherally acting cough syrup, and very happy to share that the first 3 months trends are extremely good for this cough syrup as well. So I see a lot of value add coming from new launches to the company's performance going ahead. Not only will it help us grow going forward, it will help us change the manner in which our portfolio is structured today. As you know, we are very heavy on legacy products. I am expecting new products to contribute substantially going ahead to the company.
This is helpful. And ma'am, on the cost side, I mean, if we take the price increases in coming, say, from next year's Q1 onwards, then should it be sufficient for us to maintain and grow our margins, or you still think that the pricing scenario from the input side will still remain slightly elevated? How should we look at it?
So Cinderella, the rise in input prices or cost of goods, we expect this to be now not a short-lived thing, honestly. Possibly by the next quarter, end of fourth quarter, things should stabilize on cost of goods front. 40% of our business now is exports, and like Mr. Sandeep explained, especially that part of the exports where we are into contract manufacturing, etc. Our partners also understand the pressures on the business, and we've been able to correct that. So going forward, that would get corrected. India business, as we discussed, we will take price rises wherever we feel strategically also it makes sense. I do feel that for Q4, the cost of goods will possibly stay similar to what it is now, but thereafter then it should be okay.
Thank you, ma'am. This is very helpful. I'll join back with you.
Thank you. The next question is from the line of Vibha Batra from Fair Connect. Please go ahead.
Thanks for taking my question. If you were to see our sales for FY22 year till date, 9 months, what percentage will be because of COVID? I know it's very hard, but if you were to compare it with previous year and kind of segregate that, if there is no way forward, what would be the hit on sales? That's my first question. And if you can quantify the sales growth coming year, considering everything. And also your tax rate, why is it high? And how is it likely to move next year?
Okay, so I'll take your first questions on the COVID basket, etc. So as you've seen for 9 months, we have grown at close to 19.5% for the company. And domestic business has grown at more than 27%. If you look at our COVID basket, there is one product which sort of appears in both COVID and non-COVID. That is the nature of the product, which is ATM, which is an azithromycin macrolide and anti-infective. It was always a very strong brand for us. It got a bit of an upside in the first few quarters. So it sort of plays in both places, but even otherwise, if you see, then this basket has also grown at 27%. We are one of the few companies which has a very good balance of COVID and non-COVID basket, where products on both sides have done well. So yeah, in absolute terms, next year, when we hope, for sake of everybody else, there should be no further waves. We do realize that certain upsides, possibly a product like Carval Plus, a decongestant, may slow down a bit. Some part of ATM sales may rescind, but otherwise I don't see much impact. Yeah. Coming back to your question on taxation, I think I just let Pramod handle that.
Yeah, sure. Thank you, ma'am. So, as regards to tax rate, currently we are at 35% plus surcharge. Next, this is last 2 years. Next year onwards, we will be in a better tax rate, that is 25% that will adopt.
How that answers your question?
No, if you were to quantify in value terms the COVID basket, your estimate on how much will it shrink by next year? Overall sales growth, what will you achieve coming year?
Yeah, total COVID basket contributes to around 17% of our top line, of which major product is really ATM, which I don't expect it to really shrink too much. So just one product we're likely to get impacted on, and that is Carvol. But even Carvol Plus already on YTD basis, it's on growth. It has degrown only in this quarter. So I don't feel we should have too much impact next year because of COVID, because new launches and growth of all other products, we should be able to manage the portfolio.
Okay. So overall sales growth will be what, 10 to 15% or 15 to 20%?
Yes, 10 to 15 is a good number to look at in a post-COVID year. Yeah.
Okay. And margins will improve from here, or?
Yes, they will improve from here because of various things, including better per man returns. Our PHYs or per man PCPM, as you used to call it, which used to be around 2, had gone up to 2.5, and this year has already gone up to 2.8. I had said in one of my earlier calls that in 2 years we should cross 3, and we will do that very effectively next year.
Mm-hmm. So our margins will be in excess of 20% coming year?
EBITDA margins are you talking about?
Yeah.
Currently we are at 21% EBITDA.
Yeah, okay. So they will improve from here. So, okay.
I think that's what we all work for.
Okay. Thank you. All the best.
Thank you. The next question is from the line of Vishal Manchanda from Nirmal Bang Institutional Equities. Please go ahead.
Thank you for the opportunity. Sir, do we also stand by our US guidance of 250 crore for the year?
Yeah, because of certain disruptions, in material availability and transportation and logistics, 225 to 230 is what would be a very realistic number at the end of the year.
So basically, we would need to do around 80-85 crores in the fourth quarter.
Correct.
Do we have visibility on that? Almost.
Yes. There's a very healthy order book for US too. In fact, better than Europe, and we have clear visibility.
Sir, in the US, any color on which products are driving your business there? So right now,
there are 7 to 8 injectables which we have launched, about 5 to 6 ophthalmics, and 4 solid dosages. So most of the products are doing well.
Any specific product that's doing better than?
Not to discuss it. I hope you understand.
Yeah.
Okay, ma'am. And do we have enough capacities on the suspension side, or we are adding capacities there?
We are adding capacity. One line is about to be commissioned in the month of March. A new line in Goa plant 2.
Okay, so how will that expand your capacity?
The capacity will go up by about 33%.
33%. Okay, that's not a large expansion. So it will just add 33% to your existing capacity.
Yes.
33% is pretty substantial.
Pretty substantial.
Yeah.
Are you fully utilized now, or you have spare capacities within?
We are utilized to the extent of 75 to 80%.
Okay. And there was
a new line will be over and above that.
Okay. And there was a minor disruption in Teva's market share last quarter. So have we kind of taken care of that now?
Disruption in the sense?
On brinzolamide, Teva's market share.
Yeah, I presume so. Yes.
Okay, so that has been taken care, and fourth Q should be normal for that product.
Yes.
Okay, thank you. That's all from me.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you, everybody, for being with us today. We wish all of you a safe and healthy period ahead and look forward to interacting with you in future. Thank you very much.
Thank you.
Thank you.
Thank you. On behalf of Centrum Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.